Hello, everybody. Welcome to Mo Trades, where trading is simplified, and I give some technical tips for beginners. As I was there one day, and I know that trading can be difficult, especially with the market going crazy and not knowing where to enter long, where to enter short, where to buy, where to hold. A lot of people starting end up buying somewhere at the top 64, 69. Oh, that's a big green candle and we're going to the moon. So I'm here to help you make sense of what's going on. What I like to do before I start my trading day, I like to look at the charts on higher time frame. I go to the daily or the weekly and find my levels. So I'll go to the daily for starters. The daily time frame, we can see over here for several days. I would like to draw horizontal line over here for starters. We have a good level over here, 39,698. Another level, you can see that we've been respecting this almost to the dollar. We've been wicking above is 30,413, and our support is at around, what is that, 28,692. We actually have a range over here and we could trade the range. So I would like to do that on the daily. And then what I could add, I could remove these and add parallel channels. Since we have one touch to the top, second touch, you just need 3 touches. So I can actually delete those, delete these lines. At the moment we have a range, we can draw the range, and basically what you do with the range is you trade it till it breaks. So I'll put one point over here, one over there, and one at the bottom. That's my range. So I'll trade the range till it breaks. Then I go to smaller time frames, 4 hourly. Can I find significant levels? Yes, you can see some good things being formed on the 4 hourly. You may see different patterns. You could say we're forming we were forming a rising channel which broke to the downside. Now if we break this channel, I have price estimates of where we could go down or up, but for starters, let's go with this. This is how I start my day. My trading ranges or my supports and resistance. Basically, resistance lines are gonna be above and are gonna stop the price from going up. Support will be below, expecting a bounce up. And if I can break resistances, we have more levels over here. Since we went to a 4-hour time frame, you can see over here we have 31, around the 31.5, and also we have one more level around the 32. I think we can see it in a smaller time frame. Actually, it's over here this week. But this level is significant, the 32k range, 32, 32.5. There, we've been wicking the tops of it. Okay, these are our levels. So, example, where can we go? At the moment, are you too long? Are you too short? Remember, this is not financial advice. I'm not a financial advisor. Nor am I telling you when to long, where to short. But generally speaking, when you're at the bottom of a range, you want to long. When you're at the top of the range, you want to short. Short means selling. Long means buying. At the middle of the range, you should refrain from doing anything. So that's how you do a trade. So how do I go about it? Okay, I have a range. I'm here. You see at this red candle we pumped down, we came down. Then if we take volume, let's pull out volume. How is the volume over here? You see, let's go for here. When we broke this range to the downside, we had a wick, but then bullish volume came in. We got accepted back at the range. We started getting support and we started going up. We went up. You could have made good money. Take profit one and then sell off from here, because you know this is your resistance. And over here you buy again. Over here you would have waited. Maybe you would close your trade at the resistance. You'd see you go higher. Once you see a rejection with acceptance to the range, and so on and so forth. That's how you go about with the range. Now that's not the only thing or the only lines only method I like to trade. Another thing which is very important is trend line. What is a trend line? It represents the trend that you're in. As long as price is respecting that line, that means you're still in that trend. So how did I know that I'm gonna be shorting 40K or I'm gonna be shorting 46 or whatever price? I could have had horizontal lines, support and resistance, and if you go over here, I bet you if you go left, you would find that this level 48.2 was a problem. So there you go. There you go. 48K range. We struggled at it before and we dumped. So this is what happened this time. Why did we dump from there? Basically, there is liquidity, there is limit orders, there is stop losses. There are a lot of things that the market likes to come and grab and just destroy everyone and go the opposite direction, grab liquidity and go the other way. So back to trend line. I like to draw trend lines. I go for my top over here, 48, 200, around 200. And I go down. I go down, I go down, I go down. You can notice over here I crossed across these, but because the trend is down and I would have had this data over here. This point over here would be my next point. So I didn't, maybe initially I was here, and then I saw the trend line has to move down after we got here. And we pull the trend line and you can see perfectly respected almost to the dollar. Then once I got it here, I went in short, and you could be in a short until 25K, and you can still hold your short. You could have taken profit at any point. You could decide, and we'll talk about that in a different episodes, when to decide to take profits. There's certain points I like to take profits, because if they pass certain points, there's a high possibility of reversal and the trade going against you. So let's go to methods of entering into a trade. If I go to small time frames, 15-minute time frames, and I remove all drawings and I say, how do I enter this trade? I like to use MACDs, moving average, divergence, convergence, divergence, and EMAs. I like to use 4 EMAs. I like to use this by PA Crypto. It's called EMA Savvy. I could use this. I like to use it in conjunction with the MACD. Why? MACD is a momentum indicator. If I get confirmation over here of a crossover, so you see whenever these EMAs are the 8 over here, 13, 21, 55, and the 200. The red is a 200. Whenever the 8 and 13 and 21, these three cross the orange one, what you need to do, you don't have to go all in at once. That is risky. You could do that, but make sure you have a tight stop loss. But you would like to wait for the next candle to open and close below the 8 EMA, which is this yellow one. I like it to open and close below once I get a confirmation. So essentially here, what would I have done? If I was on the 15-minute time frame, I got the crossover. I'll wait for this to open and close. I'll enter my trade on the next candle, which is this one, and I'll write it down to here. Now I can have a confirmation of that crossover, and my MACD is looking bearish. There's a crossover on the moving average convergence divergence. There was a crossover here, and we tried to cross back up, but we went down. That is one way. Another way, the same indicator, the EMAs, work very well on the 4 hours. You get fake outs sometimes, which means it shows you it's going to do one thing and it doesn't, and then it reverses. But if you have that, the higher the time frame, the more confirmed the move is. If you even go to the weekly, and if we go to the Bitfinex chart over here, you can see throughout Bitcoin history, we've only had the bearish crossover 4 times. That's 1, 2, 3. I know I've seen 4. Come on, where's the 4th one? 1, 2, 1, 2. I might have been wrong. Where's the 4th? See? Oh, there you go. It's tiny one over here, 2014. And every time we get it, it's confirmed, except for once it happened and it did not go the correct way. It faked out. The EMA cross happened too late. It happened on a green candle and price pumped. So that's why we always use stop loss. But whenever we have that over here, this was a fake out. See, it crossed over here, but we pumped and it was upside from there. How much percent was that? Wow. From 8,000 to 60,000. Whoa. Anyways, at the moment on the weekly time frame, which is a high time frame, which we only had the crossover 4 times, this is the 4th time, and we crossed over on this candle, confirmed it with the 2nd candle, and we're going down with the 3rd candle. It's been confirmed. How low will we go? We still have this red line, the 200 EMA. It's a very strong support, but we could be going to test that, recovering the liquidity on this wick. Market maker might want to eat out the stops of the long people who went long on this candle, the 25k candle. Now that's I gave you 2 methods of entering a trade on the 4 hour and the 15 minute, using trend lines and using support and resistance. Stop losses are essentially very important. How do I decide on my stop loss? According to me, it depends on how much money I'm planning to lose. If I have only $100, I'm not going to risk $25 or $50 on one trade, and my stop loss could get hit, and I lose all that capital. The game here is to preserve your capital, not to lose capital. Don't give your money to the market. If you have profit, you made profit, take at least some and leave the rest to ride. If the trade goes your way, you're fine. If the trade doesn't go your way, make sure you change your stops into profit or breaking even at least. That's one way. According to your risk, you have $100, risk 1%. Not financial advice. I'm not a financial advisor. I'm not telling you when to long or when to short, but I'm just telling you that. I would put a small amount. If the trade goes my way, fine. I could add to my short if I see, suppose the price is going down. I entered here at 40k and I wanted to add. Of course, if I add to my short or I open a new short, like some exchanges allow you to open several shorts without combining them or clumping them in one big short. But if it's going to be combined, I can calculate in advance how much will my new entry price be. That means my stop loss will also have to change if I add to my short. And where will I add to my short? Okay, I dropped over here. Where can I add from 40k? I'm here. I'm seeing a sign of weakness, and boom, we start dropping. I would add. I would move my stop loss into profit, that even if price goes the other way, I have no problem with that. I'll break even or with a small profit. How do I decide on my stop loss? Another method, on the hourly, I usually decide on my stop loss using ATR. So if ATR is 340 and I entered the trade now, I went long from here, 28.8, I would reduce my stop loss will be less than 28.8 by $340, or double that, or one and a half times of that. It depends how I'm feeling, how much risk I'm willing to take. Yeah, so the entries we're using EMAs. EMA stands for exponential moving averages. Some people use SMAs or MAs, which are the same. I use EMAs because they react faster to price, but they're still not predictive indicators. They react after the price. So on a smaller time frame, you'll see them reacting faster, and you can see the move coming on a smaller time frame. So I can come here if I was on the 15-minute time frame. Say I was in the 15-minute time frame in this area, I would see the move happening, and I could predict that, okay, we're going up. So this was on the 12th of May. I will go to the 12th of May. Let's see, the 12th of May. 12th of May. Here. Once price got accepted up, we had a swing. We went down, got a pump. We closed above the previous high, or even here, we almost went to the previous high. You could have entered here, no problem. Your stop loss would have been lower. So this would be what? 843. And you will go to 600, 28.6 something. Or you would get stop out probably. But you would be able to re-enter again because you saw the swing failure pattern over here. Looks like a swing failure. You could have took your profit here. And even when you enter a trade, always have a target of taking profit. You know that resistance is going to come in at this level. So once you get here, either you take all of it or you take some of it if you feel that it may go higher. Okay, so that's basically basic trading ideas and rules for beginners. But the main things that all beginners have to know: your position size. $100, you don't enter with $25 if you only have $100. That would be really risky. Second is the stop loss. Always use your stop loss. And stick to your stop loss. Don't keep moving your stop loss. Whenever price comes closer, you start moving it further and further into loss. Third, don't buy at the highs and sell at the lows. And once you come to your chart, you look left. If you're not sure what's happening, you look left to see, oh, why are we struggling over here? Look left and you see, oh, that's why we're stalling over here. It's a zone of interest. Zone of interest. So it was resistance turned. It was a resistance turned into support, and now we dropped. We're under it. It was resistance. So, yeah. And whenever you're in doubt of what's going on, looks so noisy, the charts look messy and noisy, zoom out. Look at higher time frames. Have a clearer picture. Draw your lines. Relax. Don't FOMO, no matter what. FOMO and position size and stop loss. These, you could call them the cancers of traders. If you don't take care of them, they will kill your trades. Your portfolio will be wiped out. You always have to have a stop loss. Trust me. At any moment, the market can reverse and give you just one big green candle or a red candle to the opposite direction that you're in. $1,000 candle spike and you're out. Your liquidity is visible to liquidity providers. Your liquidity can be seen on the book map, on high block. You could see liquidity. You could see where people have liquidity and the stop losses. So it's very easy. The game is all about money. It's all about making liquidity. They see where your money's at. They make you believe, oh, the money's going that way. We're selling. We're going short. We're going short. But at one moment, they reverse. So have your stop losses. Move them into profit once you're in a good profit. And once you're at a certain level, you take profits. Happy trading. See you in the next episode. Thank you. Please subscribe, like the channel. Peace.